I believe Bitcoin was going to grind forward, but I think at this point we're surging. The greater trend is, or the secular trend is, for the first time in 100 years, there's a capital asset other than treasury bills that you can use to capitalize a publicly traded company on. That's liquid. Bitcoin is a digital commodity, a digital scarcity, and theoretically, if you think through the implications of having a digital commodity that you capitalize a public company on, if it outperforms the S&P and is more volatile than the S&P, then you will have positively polarized the balance sheet of the company to capital, which means in theory you can raise infinite money, and the more money you raise, the wealthier everybody gets and the faster the stock price goes up and the more money you can raise. And that's blowing people's minds, right? Because that is such a profound concept that the more money capital I raise, the more capital I can raise. That breaks every textbook at Harvard and Stanford. And the proof is in the pudding with the success of Metaplanet, Blockchain Group, Smarter Web Company, Liquid, H100. I could go on. Massive raises at 21. Strive has just done a massive capital raise. Nakamoto, Orange BTC in Brazil, Melius, right? You've got an avalanche of these similar scientific, cooler. All of them have adopted Bitcoin treasury strategy. They've all discovered that that's good for their shareholders, and now they're starting to replicate our playbook, and it's good for us, it's good for Bitcoin, it's good for them, it's revitalizing the equity capital markets, and now we're starting to, and we're revitalizing the credit markets. Like basically, our equity is the highest performing equity, our options are the most valuable, highest performing options, our convertible bonds are the most valuable, highest performing corporate bonds, highest performing convertible bonds, and then our preferreds are the highest performing preferreds. And what's the commonality? It's Bitcoin behind all these things. And what we're doing is we're selling a volatile, high performance, our preferreds are 100x as liquid, as a typical preferred stock. Liquid, high performance, volatile security and credit instruments.
They've become their own asset class in some ways, given the liquidity you're just talking about.
The big idea is a Bitcoin treasury company can issue Bitcoin-backed equity, supporting Bitcoin-backed options, supporting Bitcoin-backed convertible instruments, supporting Bitcoin-backed credit instruments. And the market is starved for yield, starved for liquidity, starved for performance. Most companies, most of the Russell 2000 are zombies. The average preferred stock trades 400,000 a day. Ours trade 40 million a day. It's like the average fixed income fund is giving you 500-600 basis points. We're giving you 900, 1,000 basis points. It's not complicated. It's everybody wants more liquidity, more yield. If you're a trader, you want more volatility. And so the conventional financial playbook is strip the volatility, which strips the liquidity, which, surrender the capital. Every Mag 7 company brags about buying the stock back and upping the dividend. And I just watched on CNBC a parade of every major bank in the country. We upped our dividend, we upped our buyback, we upped our dividend, and I'm looking on with horror because they think it's a good idea. These are the 20 best and brightest corporate financiers in the world, presumably trained at Princeton or Wharton or Stanford or Harvard. And the best practice of the CFO of every one of these great companies is to surrender the capital, buy back the stock, destroying the optionality, destroying the volatility, destroying the liquidity. And we are doing the opposite. And it's working. And there's a little virus, a fire that's spreading. And at some point, people are thinking, well, wait a minute, I'm a zombie and my life is hopeless. Or I inject Bitcoin liquidity comes back to my stock, volatility comes back to my stock, a capital gets attracted to me. The world is not so hopeless anymore. And for the 40,000 publicly traded companies that are not NVIDIA and not JP Morgan, what hope do they have, Guy? I'm giving them hope. Bitcoin is giving them hope.
Is the bear case some sort of renewed fiscal responsibility around whatever administration that somehow magically strengthens the dollar, or is that genie completely out of the bottle?
You're correct. It was born out of frustration with fiat currency, and Satoshi made that point clear. I think that it has morphed over the last 15 years into digital capital. And now the more powerful, explosive use case is to revitalize and digitally transform the equity and the credit markets. I don't think the bear case is, in this particular case, fiscal responsibility, because the likelihood that that's going to happen is next to zero. As Len Alden says, nothing stops this train. And I don't think it's easy if you're a politician. Like, I don't know how any politician finds a way to run a surplus consistently. It hasn't been done, in the history of the world. You got 10,000 years of that not happening. So I think that chaos, disorder, inflation, uncertainty, entropy, war, famine, pestilence, competition, all of those things can be counted on. I think that the bear case for Bitcoin is explosive socialism leading to authoritarian communism or the like, right? I mean, the thing that threatens Bitcoin is if we decide to go Cuba, North Korea, and we deprive people of private property.
Right.
So it's more of a political threat when someone decides they don't like the fact that someone has any money. I don't want you to have property. I want to deprive you of your property rights. I would say on the margin, it's far more likely that a government flips communist or radical socialist than it is that Bitcoin stops working, or that people start exercising fiscal responsibility, or that entropy and chaos disappears from the world.
Have you fielded calls from governments or CFOs that would shock people? In other words, a call from the bankers or the finance minister of Japan or something saying, Michael, we need to pick your brain. And have you had conversations that, I'm not asking specifics, but would surprise the normal viewer of podcasts?
I would say that if you take the top 20 or 30 best run companies in the world, or the top 20 strongest countries in the world, the only one of those entities that's seriously interested in Bitcoin, where I have had very constructive conversations, is the United States under the Trump administration. The Trump administration and the cabinet members and Senator Lummis in the Senate and the leaders in the House, they get it, and they're thinking very hard about how do we harness the power of Bitcoin, the power of digital assets to revitalize the economy, do the right thing for the American people, right? I don't think you're going to see that from the Mag 7 or the mega banks. I don't think you're going to see it from other countries because, as we say, Bitcoin's on a need-to-know basis. They don't have a need to know. They'll be like the Charlie Mungers and the Warren Buffetts of the world. And it's not that they're not smart and they're not focused or they're not hardworking. It's just that people are steeped in their paradigm. They're distracted. They have 100 things coming at them every day. Tim Cook and, Satya Nadella, they don't think that the future of their company is based upon a monetary paradigm shift. That's not what's on their mind right now. They're focused on AI. They're focused on war. They're focused on tariffs. I mean, they're all focused upon first order things. And this is a second order thing that's almost too innovative for people to get their heads around until they face a near-death experience or a mortality event. And then they have to embrace the new idea.
Is it shocking to you that Vanguard, And I think everybody has heard of Vanguard. I mean, there might be similar names, but there's no better franchise. Is now the largest holder of your stock.
It's ironic and amusing, but it's not surprising. It's not surprising because if you look at a chart that we put in our last Stride ATM presentation, we showed that there's $700 billion of active capital that can invest in commodities. There's 35 trillion that can invest in equities. There's 65 trillion that can invest in credit. And you know how many trillions of dollars are invested in passive index funds. So if you think about those categories, active credit, active equity, passive index funds, none of them can buy Bitcoin, but the passive index funds don't get a choice. They're going to buy the biggest market cap companies if you qualify for the index. And so Vanguard is running the biggest index fund. So it doesn't surprise me that they're the biggest index fund investor in our company. It takes a company like Strategy to issue equity. It takes a company like Strategy to issue credit. And it takes a company to be in an index. Those indexes aren't holding palladium or soybeans or natural gas or oil. They're holding companies. So we've created a bridge between the traditional capital markets and the crypto economy. And there's one last twist here. Every well-run company in this country that you talk about on CNBC is doing everything they can to decrease their equity market cap. Think about it. They're literally surrendering capital either by paying it off in a dividend or by buying their stock back. And so when you have $500 billion and you buy the stock back, you are decreasing the equity market cap. Therefore, you're decreasing your weighting in the passive indexes. My company is issuing equity, increase. Our market, our enterprise value is touching on 140 billion right now, Guy. It was 1.2 billion 5 years ago. So we're 100x more. So what happens when our equity rallies? We issue more equity. So we're becoming a greater percentage of the indexes, whether it's the MSCI or the NASDAQ 100 or the total stock market. And we're just going to keep becoming a bigger fraction. And all these other companies are going to become a smaller fraction. Because, if you want like an athletic analogy, we're lifting with our legs and our arms, our whole body when we use our balance sheet. They're lifting with their arms, right, in a wheelchair. And it's like, okay, heroic. But, if you think about how you throw a hammer or a javelin, you don't do it from a wheelchair, right? And so that's why Vanguard is now our largest investor. And that's why the financial strategy is going to generally attract more passive capital, more equity capital.